Hey everyone, welcome back to Financial Education Sucks podcast. I am your host, Grant Raskin, and with me today is a very good friend of mine, a mentor of mine, Mr. Santo Auriemma, CEO of the SABC Group. Santo, welcome, and thank you for being here today, man. Appreciate it.
Well, I appreciate the invite, Grant. This is a wonderful little medium that you have here, and I was more than honored to be asked to be on here, and more than willing to share my experiences, and maybe hopefully help somebody that's out there.
Yeah, man, I appreciate it. Always try to get some good people on, and when you agreed to it, I was like, awesome. And I know we've kind of gone back and forth trying to figure out some different topics to sort of chat about. But I think with your background, your experience, really want to focus on kind of unlocking some business growth strategies, right? I mean, we're in some pretty crazy times right now, but I think a lot of people would love to hear just about different strategies for efficiency, right? I know you've done some M&A work in the past. Talk a little bit about, talent retention, how to keep good people, how to grow businesses, how to grow your business, right? And I think that's really where you focus your time over the years. Definitely have helped me out with a few things. So before we get started, I always like to kind of find out a little bit about our guests here, right? So please, man, take a couple minutes, tell us a little bit about yourself. How'd you get to where you are today, family, and all that fun stuff that our viewers would love to hear about.
Well, sure. I'm not really quite sure that where I started my career, and I put a point in the map to say this is how I got here. It's really kind of a up and down road. The first 20 years of my life I spent in technology. I was a programmer, and then I worked my way up to additional responsibilities, client-faced, all those kinds of things. And I was fortunate enough to have twin girls and wanted to be a little bit closer to home, so I wanted to stop flying around the country, and took a job as a CFO for a company in Bridgewater, New Jersey, and the rest is history. So
Nice.
What my company does now is a little bit, as you had mentioned, we focus a lot of time on the financial professional services side of the business. So we do a lot of business optimization. We do a lot of work on mergers and acquisitions and preparing companies to participate in the merger and acquisition side. So some of it is about client or employee retention, where we work on compensation plans and stuff like that. So there's a whole array of services that we provide for companies, but as I like to say it's where the accountants stop and we start is where it is on the business side.
Yeah, that's great. And I know just sort of over lunch and chats and calls, one of your big things that has helped me is more kind of aligning yourself for growth, right? But I think where you got to focus on is what's efficient and what's sustainable when you start looking at things like that. As a business owner or someone who works with others, like what challenges are you seeing out there today, or public versus privately held businesses? Like, where are you going in today's world, right? In 2025, and finding that these changes are kind of helping the business owner, the business grow. Any places that you're pinpointing nowadays?
Yeah, I spend a lot of time on of course, the private businesses, right? Companies that are probably 75 million and less, that don't have, full-time CFOs. We go in and do some stuff. Sometimes they don't have a really good controller. So, I have, people that work for me that go in and start building some processes and procedures. I really truly think processes and procedures is where it really kind of starts, to make sure that you do the same thing over and over again. And if things aren't in line or incorrect, those are the things that I see that are most likely a breakdown. I do have we here at SABC Group have a methodology by which we work, right? The first thing that we do is we go in and we take a look at reporting, because we want to make sure that we're looking or thinking that we're seeing exactly what we're seeing. So I would say if I go into a client's, probably 85 to 90% of the time, there needs to be some adjustment to the financial reporting. The second piece that we look at is technology. So we want to see what the technology stack looks like. We want to kind of match those things up to make sure that we're taking full advantage of whatever technology is out there and the reporting associated with that, so that we can easily kind of report on the things that were actually happening within the company, so we can make any of those types of adjustments. The third thing that we see is personnel, right? Do you have the right personnel, the right people in the right seats? And also kind of reviewing their compensation to ensure that they're, part of the solution, not really kind of part of the problem. I'm a very big you and I have had probably many conversations about this. I'm very big on the culture of the organization, right? So a
Absolutely.
lot of times, business owners don't realize that they generate whatever that culture is, where people feel comfortable working within that environment, give feedback easily so that you can make changes. I don't, me personally, I don't profess to know everything. So my people sometimes, guide me as to what we should be focusing on and not focusing on. And I'll listen to what they have to say because they're seasoned professionals and they kind of know what they're doing. So to develop that type of, culture within the company, sometimes those business owners didn't sign up for that. A lot of them are entrepreneurs and they all they're thinking about is maximizing revenue. I will say this, Grant, from the amount of leads that I ultimately get doing this, and I appreciate every single one of them, of course. I always say it's an 80-20 rule. 80% of the time that people come to see me, in 80% of those opportunities are normally the company's not going in the right direction, so they need our help kind of correcting and putting it back on track. 20% of the time they come to me and say, how do we grow? And each one of those is really, every lead that comes up is really truly unique because every company is maybe in a different stage of that particular growth at that particular point. So you have to make an assessment pretty quickly about where you need to spend your time doing and probably bring the most value as soon as possible. And that's what we do. So, it's a roundabout answer to say there's a lot of different things that happen, but I really truly think it all starts with processes and procedures, making sure that things happen the same way each and every time so that you can make sure that, you have a standard operating procedure that this is what we do when we, to be successful.
Yeah, I mean, we've talked about that a lot, right? Like even here in my own business, running a wealth management firm, of just having those things in place, right? Processes, procedures, making sure that our flow charts kind of fill in exactly down the path, and everybody's following sort of the same thing. But you keep bringing up one item that you've talked about a lot, which is the culture, right? And I think it's really important because I see it amongst my clients. You definitely see it amongst yours. You need to get everybody on that same page, right? If they all have that mission statement or the values and the beliefs that the company wants to be or what that company's striving to be, and you can build that culture around that. I mean, how important is that inside of an organization? Is that really, obviously once you get past the procedures and things of that nature, but to have that culture built in, I mean, I'm sure it could change the trajectory of a company overnight,
Yeah. And, it's very hard sometimes to define. It usually comes from leadership, right? So
Sure.
if you are comfortable leading, you usually kind of create a organization that has a really great culture, right? So there's a culture of respect and honesty and everyone feeling truly comfortable within the confines of being able to make decisions. Also making mistakes. I mean, you need to be able to make mistakes because, listen, I don't know about you, but I've learned probably more from the mistakes I've made in my life than I've ever learned from the successes, right? So,
Yeah, I've made a few.
Yeah. So, and trying to impart that upon some of these entrepreneurs or the CEOs of the company, sometimes they're like, I don't want to say use the term allergic to it, but sometimes they're like, oh my God, I didn't know I was really kind of responsible for that. But they don't realize by just walking around the building, they've created a culture that people are expecting these people to be walking around the building. So I think that's really kind of important, and having the right people in the right places.
Yeah.
What you tolerate as far as accountability goes for those people. So if there's accountability but there's no consequences, you've created you've created a culture of which people are like, oh, well, there's supposed to be accountability, but since there's no consequence on the back end, it doesn't really matter whether I do my job or not. There has to be that even mix of the right people,
Sure.
the right culture, leading them down the right roads, and having an open environment where people can participate in just about everything. I think makes the company more important. Or at least is important to the company for it to truly be successful. You'll see more stuff come out of true teamwork environments than you will from individuals.
No, that's awesome. I mean, yeah, like I said, I always try to bring it back to myself here, and that's one of the things that we're really working on in 2025 is building out our team, right? Just so that we can provide more value to the client and sort of be there even on a greater level than what we do before. But I think something that you see just working with the business owners every day is, business owners struggling with inefficiencies, right? Like what's not working and how do you really get to the root of that problem? So when those things come up, it's hard to hear as someone who's a business owner themselves, like you're doing something wrong. But how do you kind of approach that situation, right? Like how do you tell someone that they're not doing it the right way?
Yeah. No, it's you know what, Grant, it's a great question, right? And there has to be a level of acceptance. If it's me saying it, right, I have to have a level of acceptance in the organization to be able to say maybe we should be looking at this thing a little bit differently. And sometimes it works and sometimes it doesn't. I'll be honest. I mean,
Sure.
you know, there's a lot of things that come into play, right? Culture is one thing, but there's also ego that's involved as well. And, I get asked a lot of times about industry specifics, like, well, what specific industries you work in? I'm like, most of the problems that I see, 95% of them have nothing to do with the industry. They
It's
have
all the
everything
same.
to do with how the company runs,
Shit, right.
and so those are the types of questions that you get. And sometimes the response that you have to have is to be supportive of one side of it, but be able to get to a point where you're saying, I think we need to look at these things a little bit more. Or, I have this conversation a lot, and I'm not sure if you and I had this conversation, but there's a difference, of course, between a perception and a reality, right?
Oh, yeah.
And there's only one way to be perceptions, right? There's only one way to be perceptions, and that's by having facts, right? So if somebody perceives something as this way, and you could show in facts that it's not really that way, it's this way, then all of a sudden they start to change their mentality about how something is actually going. So, there's a lot of different things that go into it. Everybody says, well, what's your standard, kind of project that you go into? And I'm like,
yeah,
you don't really kind of have one of those because every company's at a different stage. Everybody's got different things to do.
Yeah.
From my perspective, go back to the process and procedures. If they think they have the processes and procedures in place, then we go in and test them to make sure that we do, and make sure that everybody knows why, their stuff is important. And just back to culture for a second, because that leads into this, right? The ability for people to work together and respect what somebody else has to do within the organization is very important. And I see a lot of where people are kind of working in silos, and nobody knows why it's important to somebody else. I believe in the transparency across the organization to make sure that says, A over there has to have this information and I'm supposed to provide. So B has to provide this to A, and B has to be respective of the fact that A needs it in a timely fashion. So, those types of things is really kind of sort of what we work on at times when we start to see that it's off in a off kilter and affecting the performance of the organization.
No, that's awesome, and again, I appreciate it, right? Like it's just like you said, all that though comes back to building that culture, which I think is really important. So, kind of switching gears, just because I know this is an area of focus for you, is mergers and acquisitions, right? Is M&A. Obviously, I don't remember the quote exactly, but there's a saying out there, a famous quote that says every business was built to be sold, right? So at some point in our lives, as much as, me personally, I'd love to hand it over to my boys and let them take it over. And maybe in your case, hand it over to your girls and let them run it. But sometimes, hey man, there's opportunities to merge or acquire or be acquired, right? So when we start talking about these things, especially in today's market, right? I mean, stock market's bouncing all over the place. People are looking at different things or different ideas. And obviously we have our entire, generation of folks that are sort of at that retirement age or moving into retirement. They're selling businesses. Like, what are you seeing out there nowadays, man, in that M&A world? It's got to be, from what I hear, it's pretty wild out there right now.
Yeah. Again, as I pointed out, I'm in a lot of private companies, right? So I get to see a lot of that type of stuff, right? Family-run businesses. I'll tell you, the likelihood of my daughters want to take this over, your children want to take over yours, as far as I've seen, is very minimal, because it seems like they don't really want to. They see how hard I think that we've worked, and I'm not really quite sure they want to work that hard. Sometimes I'm sorry, it's just a generalization, just my own personal feeling, right? But I see this a lot. Right. So guys are like, well, what am I supposed to do? And I'm like, well, let's figure out how to make your life, a little bit easier. So, we go through, another set of checklists that we go through to make sure. And first, of course, foremost is financial reporting and identifying exactly, what what you're going to presenting to somebody should you decide that the mergers and acquisitions is the right thing to do. And it also matters whether you're on the merger side or on the acquisition side. So if you're looking to get sold or you're looking to to buy somebody, evaluating that at a nice enough level is a good enough level for you and be able to purchase. It's going to be really important. So we work with all of those kinds of things. In addition to mergers and acquisitions, there's also a funding piece of it sometimes that clients need, and we do our best to put them in the right financial vehicle that makes sense for them to kind of continue to finance their business, whether they're just going to continue on or if the M&A piece is involved, find the right funding to make their dreams come true, right? So again, not a lot of children seem to want to follow in the parents' footsteps. They're interested in doing their own thing. So you're seeing a lot of this kind of stuff happening. So we set it up so that we can, help them be able to sell it outside the business. And most of the time it's either to a PE firm or some sort of investment bankers putting two, clients together and making it happen. We work on both sides of it. I mean, I have my own preferences, but I'll keep that to myself about how these things run and how these things really kind of become more successful. What we try to do as much as possible, though, Grant, is remove the risk that somebody who is looking to buy it. Let's remove all the risk, so this way they can't say, well, I'd like to get a discount on this or a discount on that because this looks a little bit risky. Document everything, and the more you document and the more that you can show that this is a consistently run business, all the better for those firms that want to sell.
That's awesome, man. I appreciate it. Are there any key factors or numbers that really stick out when you're looking at saying, hey, I'm thinking about selling my business, sort of got to a point where looking to take that next step and move on out? Any hot topics right now or items that saying, hey, you got to look at least these 2-3 things if anyone's looking to sell a business?
Yeah. Listen, gross margin. I always look at KPIs, right? So gross margin is gross profit is the most important number to me, because when somebody's buying something, there's a scale that you're in your mind, you're saying, look, I'm probably going to gut as much of that as possible on the overhead side and try to just incorporate that into my company. So the thing that really kind of matters is what's your revenue and how much it costs you to make that revenue. So that's, your revenue minus cost of goods sold or cost of sales, or however you need to, depending on what industry you're in, we'll come up with a gross margin or a gross profit number and the percentage associated with that. And, if that's a healthy percentage, that's what you can expect. If you buy a company, you can expect to bring that over. The rest of the stuff on the overhead side, is all part of that risk stuff that we talk about. Are there individuals that are reported, as far as payroll is concerned, that's really important to make that revenue happen and the cost of, goods to stay the same, so that we can, guarantee that that's the, ultimately the gross margin that we're taking into the organization. Are there other contracts I'm going to have to take on? Is there debt that's on? All that kind of stuff. That's all the cleanup stuff that we'd like to get done. Yeah. So that if somebody does say it, we just removed a whole bunch of risks. So now all you're doing is taking the revenue and the cost of goods sold associated with that and taking that on your merry way. And sometimes that's a really powerful statement, because that means, man, these guys have their stuff together. It's really easy to kind of buy them. And by the way, this works in reverse if somebody's looking to buy something. Sure. If I'm looking at something, I'm like, oh, yeah, all right, here's your gross margin. But you have these other things that are risks out here. I'm going to have to discount whatever we feel like the ultimate buying, the ultimate buy number is on a particular purchase. So, yeah, it works both ways.
Yeah, obviously you got to know what's there in front of you. And, a lot of things that you and I have talked about sort of over our time, right, is kind of like the financial health of a business, right? And there's so many things that you and I have shared and talked where business owners just don't know. And I think one of the big things you've always said is, like, I got to come in there first. Like you said earlier, I got to clean up some stuff, right?
Yeah.
So what are some large financial mistakes that you're seeing from business owners out there, whether a guy's running a $100,000 company or $100 million company? I don't think it matters. I think we're all making, similar mistakes. What is it that you're kind of seeing out there right now?
Yeah. one of the things is that I don't think, again, I'll go back to KPIs, right? One of the KPIs I just mentioned, which was gross margin, they're not trying to maximize that gross margin, I think sometimes, or they're not figuring out how to best maximize that gross margin. I've got a client that just really kind of came back to me a bit, and their gross margins used to be larger, and that's just a function of, really understanding, what it takes to actually do whatever you're doing, and adjusting adjusting ways to adjust the numbers that are there and get better efficient products, or charging more for your product, all those kinds of things. I see some of that customers are a little bit hesitant to raise pricing because they're afraid of the effect on it. And I'm like, you have to do it if, because, every year insurance is going up, and, like all those types of things.
Everything in this world, yeah.
So there's a little bit of consistency there. Some of the companies that have to carry ARs, non-website based product companies, but more services based companies, staying on top of your AR is really kind of important to ensure that you have the cash flow necessary to kind of pay the bills that you need to do, and not, because the cost of carry money is pretty expensive, a lot more expensive now than it has been in the past.
Yeah.
So if what used to be, a 2 or 3% is now at 8 or 9%, that's, you wind up being the middle road bank for somebody else, and if you have to pay your vendors in 30 to 45 days, but you're not getting paid for 60 to 90 days, that float is on you.
Yeah. So with that being said, so how do you take that? Because my guess is that's more of the business owners who are doing it wrong, is they're more reactive to it, right? Versus proactive. So how do you help someone transition to or from reactive to proactive? How do you work with that individual in the mindset of like, we need to get your shit in order?
Yeah.
Right. I hate to say it like that, but that's kind of lame terms.
You use the right terminology though, proactive versus reactive. I try to teach as much proactivity as possible.
Yeah.
I mean, proactive guys have been taking hits for a bunch of years because, they're always like, well, you guys are like doomsdayers. So you're just predicting something that's going to happen. It might not happen, but you're just trying to put all those things in place. But as much as possible, we try to be as proactive as possible. Because I think that when you, especially when you talk about cash collection, there are ways to go about collecting cash. Like if if you've got 30-day payment terms, starting to collect that on day 29 is probably not going to be very successful on day 30, right?
Start a little earlier.
Right. So there's methods that we have that that I've learned over the years that are really successful. And you find out this, Grant, it's not necessarily all your clients, right? It's just maybe some of your clients that you have to apply those processes to. Other ones pay you in a timely fashion, and it's fine. And there's other things you could do. I remember years, and I won't use names, but years and years ago, when I first started out being a CFO, there was a client that wouldn't pay us. And we were in a services-based organization, so all of our money was going out the door as soon as possible, but we weren't collecting from this particular client, and was a very large client in the state of New Jersey. And they were charging, they wouldn't pay us for like 180 days. So what we would do, I made the determination, whenever we did a quote for them now, just add 15% to the quote. And everybody's like, why? I'm like, because then I don't care when they pay me, because I've already built in a 15% buffer to carry the money for the 180 days or 240 days, whenever they ultimately pay.
It's just about structuring the contract the right way.
Right. But so their total, we used to do $600,000 a year for them, then wound up doing $400,000 a year. But I didn't care when they paid me, because the bottom line was I was making 15% more than I was making on other clients. So I didn't care. It's just strategy. It's just strategies that you utilize, and when people don't want to be, don't want to stick to what you need to have done in order for you to run a successful business.
Yeah, no, it's funny, right? Like you mentioned strategies, and you and I have talked before structuring a business, how to do things, right? But where you've kind of helped me is where I kind of want to take sort of this part here of our conversation is from acquiring talent, right? I mean, job market's competitive right now. We all know that. As a private business, as a small business owner, how do you compete with the big firms? I look at someone like myself. It was a small boutique wealth management practice. looking to bring in some good folks, but how do you compete with the Merrills and Morgans of the world? And then obviously in any other line of work, right? Like what are you seeing these businesses do to get that top talent through the door?
Yeah. There's probably no set of rules that just work that apply to everybody.
Sure.
Right. Uh, Again, go back to the culture environment, right? If you have the right culture, most people want to stay. And sometimes, and I'm finding this out more and more, it's usually not about the money. It's normally about flexibility nowadays, right? So you have to be able to, and remember, there's different generations of people that you're actually maintaining here. So everybody wants to be, kind of be treated a little bit differently. So, you got to make sure, I'm not saying that you should cater to everybody. What I'm saying is that you need to be kind of a little bit flexible and let them play by your rules most of the time, but sometimes you might play by their rules a little bit just to kind of be able to ease that. It's not always about money again. It could be about time off. It could be about when they work. It could be a whole set of things that, kind of make sense. Number two, culture also is the tolerance of other people that are within the organization. If you have really significant underperformers, then you have a really top performer. They're going to look at that as being a negative on the organization. And, and they wind up, maybe leaving the organization because they're saying you're tolerating, bad workers and forcing me to kind of continue to overextend myself because they're not basically filling up their end of the bucket. So I think it's making sure that you have a really good system where you're evaluating the existing talent and making sure that everybody's is well compensated. But I'm not saying over the top compensated. You might want to give them a couple more days off. You might want to do different things in order to really kind of make it a special place to work at. And I think that that's where we start to attract the talent in the first place.
Okay.
It all comes down to personality. When people leave jobs, they normally leave because of managers, not because of companies. So you want to make sure you get the right people in the right spots, managing the right people, and and continually to invest in the managers' training and stuff like that on how best to handle the people that are going to be coming across. Remember that those people are then the people that you could be, sending out to your clients. So you want to make sure, and especially in my business, you want to make sure clients like them. I'm very cognizant of that. I hand stuff off to some of my guys, and I'm always following up. And the clients are like, "Well, we really love you guys. That they know how to play in the sandbox with everybody, and really well. And we really kind of appreciate that, and that makes my life a whole bunch easier for sure."
No, I mean that's awesome because I think a lot of people do struggle with that, right? So if you're able to come in there and help with those changes and work that Santo magic, it's sort of amazing. But it's definitely. It's interesting to me what you said about flexibility. I've had Heather with me now almost 6 years. And, forever it was always, if you pay somebody more, it's going to motivate them more. But it's funny how it's not always about the dollar, right?
Yeah.
Her and I have agreed to have a very flexible schedule for her. She has 3 kids. She wants to be able to see them and go to events and things of that nature. And I think for her, that's really important. And that's one of the things that we instituted here at the office was allowing her that flexibility to, hey, she may have to go to X at 2:00 on Thursday, or she may need to come in a little bit later on Monday. But if it allows the person that flexibility, I've seen it return for me. My
Sure.
rate of return is, as we would say, right, is been phenomenal with that because as the employee, they understand that, hey, management's there, they care about me, they want me to enjoy my life, live my life, and they're being able to work with me, which allows, I think for greater flow, throughout the business.
Yeah, no doubt. And when you see it not work properly, it sticks out like a sore thumb to you.
See, I've seen it.
And I've got a million examples that I'd rather not talk about here, but where you just see it, and I'm like, I could so help that company, and they would never think about bringing me in to go help them because they don't really think that they have a problem, but they do. It's unfortunate, but it's just the way it goes. Sometimes you can't see the forest through the trees, right? So, and the stuff that we do sometimes, most of the time we focus really truly on the financial aspect of it, but eventually towards the end of that, engagement, there's some business coaching that goes on. There's some executive coaching about handle certain circumstances and who to keep track of and who to keep on course to to make sure that they're locked into the business because it adds value to the organization. It's always good to be able to identify that and push towards that. So again,
That's awesome.
yeah, again, there's a lot of different aspects of it, but keeping good people is always a key success factor for every customer, every client that we go to.
No, that's great, man, and I appreciate it. Like you shared a ton of information with us today. So for those kind of business owners that are out there, right, looking to improve efficiency, financial health, talent retention, like where do we start? And I say we as the business owners of this country, like where do you start, and what actions could someone implement today? Just listen to you, right?
Yeah, listen.
What can we start to do?
Yeah, as I like to say, talk is very inexpensive, right? So if somebody ever wants to talk to us, it's very easy to kind of get in touch with me. We can easily, just have a conversation about what's going on with your company and what you think the positives and negatives are, and let me see some reporting just so I can report. It doesn't cost anything for somebody to do that, and I can give them some pointers about how we think that is. Awesome. How we've been kind of really successful is that I normally come in, or one of my guys comes in and does like kind of I don't want to say back of the envelope assessment of kind of where you are, where we think you are, and where the areas of improvement that would give you the biggest return on investment would be, so that we try to focus on those particular things first. As I like to tell people, we're going to, there's going to be an invoice that happens after the first month, and you have to start to bring some value when that first invoice comes out, because people are like, what am I paying for? But there's a lot of education that has to happen there too. But That's the reason why reporting is first, because it's really, kind of relatively easy for me to look at a report, start to understand what's in that report and how those things are structured, and how maybe we could, figure out a way to get through that and fix that. So, and that's immediately becomes something of value, right? So, it all depends on at what stage we are coming into a company, what the goals are. If I'm trying to solve a problem of why it's going in the wrong direction, that's one thing. Yeah. One thing I always point out to people about financials, Grant, is that financials are only a symptom of a problem. That's all it is. We see the problem. I personally, like myself, I'm able to trace back from where that problem exists to find out where it's actually happening, so, awesome. And it's from significant training being in CFO is that I get to see that. I got to see that firsthand for years. So I know what that's supposed to be like. So
that's awesome, man. And
yeah,
I've seen you do it firsthand. So it's pretty cool to watch you kind of go in, uncover, unravel, right?
Well, I appreciate that.
A company, and then turn around and go, and here's how we can help you guys build. Right. So,
yep,
that's been really cool for me. And, man, we just took the last half an hour here or so and chat about a lot of things, and really wanted to thank you again for being on here, and to our audience and listeners out there today. We will definitely obviously share your info, Santo.
Yeah. Great.
If anybody, wants to reach you, what's the best way? Is it email, give you a call, check out your website?
Yeah. If you'll post my email, it's my first name, Santo at sabcgroup.com. And you can go out to our website and go through that way, which is sabcgroup.com is the actual website. So you can take a look at it. We're in the midst of kind of, moving it around or doing a little reconstruction on it, but it's fully workable. And listen, if I can help somebody, that's really kind of what we focus on, is ensuring that we kind of help people reach the goals that they ultimately want to get to. I know we're a little counterintuitive where people have to spend money to make money, but I think that the experience that we have, myself over 40 years and my guys over, each of them has between 20 and 30 years. We kind of know what we're doing, and we kind of know the fastest way to get to, a real true return on your investment, because we have to return on our investment every day.
Yeah, man. I know you run a great crew over there. I've heard the stories. So hopefully our listeners are out there. If they hear something, guys, definitely reach out to Santo. He's helped changed, my business, friends of ours. He's always there for a call. Just a great guy, and someone I'm happy to have been on here today. So Santo, again, I thank you very much. on behalf of the Financial Education Sucks podcast. Just appreciate you being on here today, man, and sharing your thoughts and insights. Definitely will have to have you back on to continue these conversations.
Well, hey, listen, Grant, thanks for having me. As my wife will be the first one to tell you that I like talking about business. I mean, that's what I spend most of my time doing.
Awesome.
I love it, and I think because I like what I do makes us pretty successful is what we do.
Absolutely. Well, again, Santo, thank you to our viewers, our listeners. Thank you so much. Once again, Grant Raskin, Financial Education Sucks podcast. Like, subscribe, follow, do all that fun stuff you're supposed to do on social media. I thank you guys again for listening, and have a wonderful day. Enjoy.
Have a good one, Grant.
Thanks.
Bye-bye.